Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far we have completed 9 short problems on ratio analysis. So now in this video 5 more problems. That means I'm going to complete the short problems on ratio analysis in this video. From the next video onwards we'll start the main problems, long problems on ratio analysis. Remember, already I told you all the problems are based on the formulae. Without remembering, without understanding the formulae and its significance, you cannot be able to understand the topic of ratio analysis. So my suggestion, watch the theory videos. First 4 videos I uploaded on theory regarding meaning of the term ratio, ratio analysis, uses, advantages, limitations, classifications, all these things. Then second, third and fourth. These 3 videos I've uploaded, I have explained all the formulas and their significance I have explained. So watch those 4 videos, be thorough, be perfect on the formulas, then come to this video. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject financial decision making, select the video of ratio analysis, watch the first videos, be perfect on the formula. Then you can come. Now before starting the 10th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the solutions of 5 problems, 10, 11, 12, 13, 14. Then I'll explain all the points. Now, see the problem number 10. 10th problem I am reading out. Given that cost of goods sold, COGS, cost of goods sold is 2,80,000. Operating expenses are 4 lakh and net sales are 13,60,000. So, we are given cost of goods sold, operating expenses and net sales. Calculate the operating ratio. So, first time we are going to apply this ratio, operating ratio. The formula for operating ratio is cost of goods sold plus operating expenses divided by net sales into 100. Profitability ratios always we multiply by 100 because we need in percentages. So here operating COGS given, operating expense given, net sales given. Operating ratio formula COGS plus operating expense by net sales into 100. Substitute the value, you will get 50%. That's it. This is the 10th problem. Now 11th problem. With the following particulars, find out gross profit ratio, net profit ratio and comment on them. Sales are 100 crores, cost of goods sold 50 crores, other operating expenses 25 crore. So we are given sales, cost of goods sold and operating expense. So first of all, gross profit ratio. The formula for gross profit ratio, gross profit by net sales into 100. But gross profit is not given. Now remember the formula how to find out the gross profit. Sales minus cost of goods sold, you will get the gross profit. So 100 crores is the sales, 50 crore is the cost of goods sold. So 100 minus 50, 50 crore is the gross profit. Now substitute gross profit ratio GP by sales into 100, 50 by 100 into 100, 50% is the gross profit ratio. First answer completed. Secondly, net profit ratio. Net profit by net sales into 100, that is a formula for NP ratio. But net profit is not given. Gross profit minus all indirect expenses, all operating expenses. Operating expenses are given in the problem, 25 crore. Gross profit we got it, 50 crore. So net profit is equal to 50 crore minus 25 crore. 25 crore is the net profit. Substitute in the formula. Net profit ratio is equal to 25 by 100 into 100. That will give you 25%. That's it. 12th problem. From the details given below, calculate return on capital employed, ROCE, and return on total assets. Lastly, return on equity shareholders fund. So 3 ratios it is asking you to calculate. The first, it is asking you to calculate return on capital employed. This ratio is also called return on investment. So return on capital employed is equal to PBIT divided by capital employed into 100. That is the formula. Return on capital employed, ROC, PBIT by capital employed into 100. PBIT is not given in the problem. Profit before interest and tax is not given. PAT is given. Net profit after taxes 1,50,000. Net profit after taxes, that is PAT. So PBIT is equal to PAT plus interest plus tax. Already in the previous video also I have explained you. We have applied this formula. PBIT is equal to PAT plus interest plus tax. So PAT is given 1,50,000. Interest is given for 23,500. But tax nowhere it is given. Nothing is mentioned regarding tax. So put 0 as tax. So 1,50,000 plus 23,500, 1,73,500. This is the PBI. Capital employed is directly given in the problem. You can see 11 lakh. It is given directly. No need of any calculations. Capital employed 11 lakh. So 1,73,500 divided by 11 lakh into 100, 15.77 is the ROCE, return on capital employed. That's it. Next, return on total assets. PAT divided by total assets into 100. Because whenever we are calculating the profitability ratios, multiply by 100. We need in percentages. So PAT is given 1,50,000 and total assets are also given 12,65,000 directly given in the problem. 12,65,000 total assets. So 1,50,000 by 12,65,000 into 100, 11.86% is the return on total assets. Now return on equity shareholders fund. The formula for return on equity shareholders fund is PAT minus preference dividend divided by equity shareholders fund into 100. Already I have explained this in detail in the theory video. The PAT is given in the problem 1,50,000. Preference dividend is also given in the problem 16,000. The only thing, equity shareholders fund is not given. Now we have to calculate equity shareholders fund. Net worth is given. Net worth means shareholders equity. The total shareholders fund is 7,50,000. But we don't require shareholders fund, total shareholders fund. We need equity shareholders fund. Only equity shareholders fund we require. So how to find out equity shareholders fund? From the total shareholders fund, deduct preference share capital. So here net worth is given 7,50,000 and preference share capital is given 2 lakh. Remove preference share capital because we require only equity. So net worth minus preference share capital. So 7,50,000 minus 2 lakh, 5,50,000 is the equity shareholders fund. Now substitute. Return on equity shareholders fund is equal to PAT 1,50,000. Preference dividend given in the problem 16,000. Divide by equity shareholders fund 5,50,000. So we get the answer 24.36%. This is the return on equity shareholders fund. That's it. This is the 12th problem. Now 13th problem. The working capital of a firm is 80,000 and its current ratio is 5. What are the current assets and current liabilities? So two items are given. Working capital is given, current ratio is given. And we have to find out CA and CL, current assets and current liability. Working capital 80,000. Then current ratio 5. CA how much? CL how much? Working capital. The formula for working capital is current asset minus current liability. CA minus CL. So working capital how much? 80,000 given. CA we don't know, CL we don't know. Now bring the CL to left hand side, LHS. So minus CL will become plus CL is equal to CA. Keep CA as it is on RHS. So we got the equation. Current asset is equal to 80,000 plus current liability. From this equation we got this. 80,000 plus current liability is equal to current. Bring the CL to LHS. So 80,000 plus CL is equal to CL. One equation we got. Now current ratio. The current ratio given in the problem is 5. What is the formula for current ratio? CA by CL. So CA by CL is equal to 5. In place of CA, I can write 80,000 plus CL because already we made the equation. Current assets are 80,000 plus CL. So in place of CA, I am writing 80,000 plus CL divided by CL is equal to 5. Now I can make the cross multiplication like this. 5 into CL is 5 into CL. 5 into CL is 5 CL like this. 5 into CL is 5 CL. 80,000 plus CL into 1 is 80,000 plus CL. Now bring this CL to LHS, plus CL will become minus CL is equal to 80,000. So 5 CL minus 1 CL. Only CL means 1 CL. So 5 CL minus 1 CL, 4 CL is equal to 80,000. CL is equal to 80,000 divided by 4 because multiplication is there. So 80,000 by 4, 20,000. So one answer we got. Current liability is equal to 20,000. CL is equal to 20,000. Now we need CA. Substitute in this equation. 80,000 plus CL is equal to CA. So CA is equal to 80,000 plus CL. In place of CL 20,000. So CA is equal to 1 lakh. Got it. We got the current asset, we got the current liability. Current asset are 1 lakh. Current liabilities are 20,000. That's all. This is the end of 13th problem. Now 14th problem. This is the last short problem. Given that current ratio 1.75, liquid ratio is 1.25. Liquid ratio means quick ratio. The net working capital 1,50,000. Calculate current asset, current liability, liquid assets and stock. So 4 items we have to find out. Current asset, current liability, liquid assets, stock. So here current ratio 1.75, liquid ratio or quick ratio 1.25, working capital 1,50,000, CA how much, CL how much, liquid asset how much, stock how much. That is the problem. As usual, how we have done this previous problem, same thing. Working capital. Working capital formula is CA minus CL, current asset minus current liability. Working capital is given in the problem 1,50,000. CA minus CL. Bring the CL to LHS. So minus CL will become plus CL. 1,50,000 plus CL is equal to CA. One equation we got. Now current ratio. Current ratio is 1.75 given. The formula for current ratio is CA by CL. In place of CA, I can write 1,50,000 plus CL. Divide by CL is equal to 1.5. Now if I make a cross multiplication, 1.75 into CL is 1.75 CL. 1,50,000 plus CL into 1 is 1,50,000 plus CL. Cross multiplication I am making here. Like this. So bring this plus CL to LHS. So minus CL. So 1.75 CL minus CL is equal to 1,50,000. So 1.75 minus 1, you will get 0.75 CL is equal to 1,50,000. CL is equal to 1,50,000 divided by 0.75, 2 lakh. So we got current liability 2 lakh. One item we got. Now substitute the value of CL in this equation. Equation is CA is equal to 1,50,000 plus CL. So substitute 1,50,000 plus 2 lakh, 3,50,000. 2 items we got. Current liability we got 2 lakh, current assets we got 3,50,000. Now we need liquid assets, means quick assets. Quick assets or liquid assets means same. So what is the liquid ratio? Quick ratio given in the problem 1.25. Quick ratio is 1.25. The formula is quick asset by current liability. QA by CL is equal to 1.25. CL already we got it 2 lakh. So QA by 2 lakh is equal to 1,25,000. Now cross multiply. QA is equal to 2 lakh into 1.25 is 2,50,000. We got the quick asset. We can call it as quick assets or liquid assets, means same. So we got liquid assets at 2,50,000. 3 items completed. Last and final item we have to calculate the stock. Now remember the formula. Quick asset is equal to current asset minus stock minus prepaid expense. Already I told you, I explained you in the previous videos. Quick asset is equal to current asset minus stock minus prepaid. Suppose we don't have any prepaid expenses. Suppose, assume, then quick asset is equal to current asset minus stock. So I am writing quick asset is equal to current asset minus stock. Quick asset, how much we got? 2,50,000. So in place of quick asset, 2,50,000. Current asset, how much current asset? 3,50,000. Minus stock. Stock we don't have. Bring the stock to LHS. The minus stock will become plus stock. Is equal to 3,50,000. Take this 2,50,000 to RHS. So plus 2,50,000 will become minus 2,50,000. Stock is equal to 1 lakh. That's all. This is the end of 14th problem. So totally 14 short questions are there. Hope you are following me clearly, because each and every formula, each and every concept I'm explaining in detail. So watch all the videos from beginning till end to get a complete command so that you can face the examination boldly with full confidence. Inshallah, the main problems we will start in the next video.